All right, guys, back to work. A fantastic day comes to an end. Hope you guys made some money out there. But now we got one more day left before the holiday coming, Thanksgiving on Thursday. We got big news out of the way this afternoon. We got the FOMC minutes out of the way. Big NVIDIA earnings are out of the way. And more importantly, we have three important clues right on these 60-minute charts in front of us. As always, I'm going to cover my favorite trades in the video tonight, and by the end of this video, you'll have a simple game plan to make some money on Wednesday. Now, before we jump in and talk about these three important clues and my favorite trades to make some money tomorrow, I want to make sure to remind you, make sure you subscribe to our channel. That way you don't miss tomorrow night's video. If you like these lessons, do me a favor here tonight. Hit that like button here on the video. Give me a shout out down in the comment section below. Thank you so much for tuning in and supporting the channel. But enough of the intro, right? Let's get started here. What are the three important clues we have right now on the 60-minute? Well, first of all, we've got some big strong moves going higher right now on the S&P and the NASDAQ. Anytime we see strong moves like this, we expect a two-legged pullback and a retest of that high. That strong move is a very big part of our analysis for tonight. We got that range we talked about in last night's video. If you tuned in last night, we talked about how we're looking for a breakout pullback off the top of that trading range. That is a big part of our analysis here tonight. And you might have noticed we just had a double bottom on both the E-mini and the NASDAQ, the SPY, and the triple Qs. Double bottoms are a big clue because this tells us a double bottom reversal is on our radar for tomorrow. Strong move higher, breakout pullback off the range, and a double bottom here on the 60 minutes. All three of these clues are tipping us off to where the best money making trades are probably going to be for tomorrow. Now, before we dive into the actual entry tactics, the setups I'll be watching for tomorrow in the trade room, let's double check our schedule for tomorrow because there's three important things I want you to be aware of. The first thing, of course, is tomorrow is the last day pretty much of the week tomorrow. Thursday, of course, the holiday. Get a half day on Friday. So just be aware of that. There'll be no video coming out tomorrow night. We'll take off some time for family and friends over the holiday. Before we do that, though, we get durable goods orders and jobless claims tomorrow at 8:30 Eastern Time. That's the first block of news. We get consumer sentiment tomorrow at 10 o'clock Eastern Time. That's something I have on my radar as well. So keep those items on your list for tomorrow. 8:30 durable goods and jobless claims, 10 o'clock consumer sentiment, and again, no video tomorrow night. We'll come back next Monday evening and we'll kick off that final week of the month of November. Now, back to our charts though. It's good to know when the news is, but we know by now, right? The money is made on these charts. Why don't we now go over my favorite trades here for tomorrow? Let's start first tonight on the E-mini and the SPY, and we'll finish up tonight on the NASDAQ and the triple Qs. Be aware, everything we talk about tonight on the S&P and the SPY can pretty much be applied to the NASDAQ as well. They're very, very similar. Now, in the intro, I talked about how we have that strong run up, that breakout pullback off the range, and that double bottom here on the 60-minute. Let's drill down now. Let's get our hands dirty now on some faster time frames. I like to use the 60-minute chart to plan my trades for the following day, but I do most of my trading in our trade room every morning on some tick charts. This is a 7,000 tick chart. You can see in the upper left-hand corner, and if you're watching for the first time right now, that is the 21 EMA. Nothing special about that moving average, a default 21 EMA. There are three big clues on the tick charts. The first one is this big range, right? If you watched last night's video, this is that big range. And this, of course, is that strong run up, that pullback. And we know where the market wants to go, right? It wants to run back up and take out that high. That's that breakout pullback. That really is kind of the overarching clue here on the chart right now. It's a very strong run up, breakout pullback. The buyers are trying to go back up and retest that high. The second clue is extremely important, and that, of course, is this range right here. Now, why is that range important? Well, if you're taking my free video classes right now, you guys are learning about why I love ranges. Ranges love to rotate, right? We'll go down, up, down, up. Ranges love to rotate. They act like magnets. They're balanced. And so ultimately, if we understand the general idea of this, if we understand that we have this strong run up and everyone looking for a way to get in on the way back up to retest that high, as you can imagine, right, buyers are going to be loving buying basically bear traps, double bottom reversals, right, off of that low. And we have to assume with the big holiday coming on Thursday, we have to assume that unless something drastic happens here, got to assume we're probably looking for sellers up top there and create one big range here, most likely into the holiday. Now, I'll talk about some breakouts here in a moment, but my vision for tomorrow and possibly the rest of the week this week, depending on how tomorrow goes, is to focus on rotation and focus on traps. Now, if you're in my free video course, this should make a lot of sense, right? Rotation, back and forth, buy low, sell high, buy low, sell high, right? With that range. And traps. Traps are a specific type of entry pattern that is kind of my favorite way to trade these kind of wild range-bound markets. So, for example, as the market, let's say we go lower. Wouldn't surprise me at all if you went lower, trying to drum up some more buyers here. Traps. Traps are the name of the game. Now, as I'm trying to buy off this low, and I'll talk about shorting off the high here in a moment, if the market was to go lower, right, I would want to use a bear trap to basically, I'm not a big fan of picking tops and bottoms. It's not my style of trading. Picking tops and bottoms is difficult. What I'd rather do is look for a bear trap. Let sellers try once, let them try twice, and try to get underneath those lows. Notice how this pattern looks, right? It's just like this guy over here. I'm going to focus underneath these range lows. I'm going to focus on that pattern right there. We go up, bears once, up, bears twice. Notice that higher high in price, right? And that trap below that low. This pattern is my best friend anywhere underneath this low. Now, it could be a strong run down, bears once, bears twice, bear trap back in. It could be a V bottom off of that low, bears once, bears twice, back in. It could be a strong run down, a pullback, a retest of that low, and you guessed it, once again, bears once, bears twice, get that trap, right, coming back in. Bear traps around those lows are the key. Now, one variation of this that you want to kind of keep in mind is we oftentimes will see stuff like this where it'll run lower. We'll get that initial bear trap going long off the low. The market will then pop up. And now think about this. If we end up running higher here, where does the market want to go? It wants to rotate back and forth. So as it starts running higher, oftentimes we'll see these kind of pop and grind moves like this, right? It'll kind of pop up and grind higher like that. These are easy. Mark off the high like that. Mark off the low, right? Find that channel. And guess which entry pattern? Guess which entry pattern, right? Traps, right? Absolutely. That's the goal as we come off of that low. So without sounding too redundant and repeating myself too much, it's bear traps again and again, right, off of those lows, because we have to assume that as we go lower, there are more buyers waiting down there. But with this momentum going lower, right, I want to make sure I trap in those sellers, because even if we go lower, we're still a pretty bull market overall on the 60-minute. Now, as we go higher, how do you think I can sell off the high? Well, actually, too, as we rotate higher, the market wants to go where? It wants to go back up to retest that high, right? As we go higher, how would I buy going higher? You know the answer to this, right? It's a bear trap once again, right? It's this pattern right there. It's a higher high in price and a trap below this low. Now, I'm not going to go into all the details about why I say that right now. I cover kind of the fundamentals of this strategy in our free video course, which reminds me, by the way, if you're watching for the first time right now, this might be all brand new to you. What are traps? How do we trade ranges? Why is rotation so important? I'll tell you, I teach all about ranges, rotation, traps, fake out breakouts, how to make money running stops. I cover all this, and I have hundreds of examples of this stuff inside our free video classes. What I'll do is I'll put a link up here for you in the upper right hand corner. Grab that link and take that free video course, because the strategy I teach in that short video series will teach you a remarkably simple trick we use to know exactly where the best winning trades are going to be each day in our morning trade room. And most importantly, I'll teach you my 4 favorite entry patterns to help kickstart you making money: traps, failures, pullbacks, strength moves. Bottom line, guys, the markets are way too good right now not to be making consistent money. If you hate missing the best trades each day, if you're tired of taking so many losses, grab that link, learn that strategy, because that will get you moving in the right direction. And also be aware too, if you can't grab that link up top there, I'll put all the important links tonight down in the description of the YouTube video. I'll put the free class links down there, our trade room membership links. We trade together every morning at 8 o'clock Eastern time. And also too, I post a lot of updates on Twitter every day. I'll put my Twitter handle down there as well. If you're on Twitter, follow me there for a lot more updates in between these videos. So as we go higher, I'm looking for those, again, that same bear trap as we go up. And then what do you think, right? As we go higher here, right into those highs, could I sell it? I can sell it. What's the problem though? The problem is we're very bullish, right? We're very bullish as we go higher. What entry pattern do you think we're going to use off the high? One of these crown reversals we talked about in last night's video. These are very simple, right? As we pull back right now, can we all agree this would be a horrible place to be a buyer, right? It's a bull market overall. But not a very good place to be a buyer. I'd like to buy as we go up into this area, right? I'd like to buy as we're making our way up. But once we get up in this area, once we complete our pendulum swing, once we get up into these areas of resistance, I'm not looking to buy anymore. I'm taking profit up there, right? But let's see if we can get some rookies, some inexperienced traders. Let's see if they come in and buy it once, lower low, buy it twice, right? Get that bull trap off that high. Notice once again, lower low in price, trap high, lower low in price, trap high. That's the way you short this sucker off of that high. And again, you'll see a lot of examples of these in that free video course. Now remember, these come in lots of different shapes and sizes. So for example, it may pop up, it may V-top right off that high and begin to grind. What do you do in those? You mark off that low. Yeah, you find a channel off that high. And you know me, I can't help myself, right? I love traps. Mark those swings, right? And grab that bull trap off the high. The name of the game, like I said earlier, the name of the game is rotation and traps. Understanding that we're bullish overall, we're going to rotate back and forth like this, buying low, selling high, trading, using stops, right, to fuel that move back and forth, and looking for bull traps off the high and bear traps off the low. We may see something like this where it runs up. The buyers come in, they pull back, they retest that high. Remember, double bottoms love to run up, double tops love to run back down. 1 try for the bulls, 2 try for the bulls, right? Lower low in price, trap high, it's another bull trap. It may V-top off that double top, right? Run back down. Where does the market want to go? It wants to rotate back and forth. What do? We find that new channel as we roll lower. Draw off that low. Don't chase the market lower. Find that channel, mark up those swings, right? Grab those. And really, in all reality, I always like to go off these higher, these swing levels like this, because that's usually where the easiest money is made. But this could be any of the entry patterns you guys are learning in the free video course, right? Traps, buyer failures, pullback combinations as we roll off the high. I'm keeping things pretty simple right now because you guys are busy people, and you'll learn all the rest of that stuff inside of the free video course. One thing I want to talk about too is that because we're so bullish, right? If we were to roll higher here, here. Again, we should be trying to go back up and retest that high. We may end up making another leg lower, trapping in, and then running back up to retest the high. But we pretty much know what the overall goal of this market is right now. If we were to get a strong run higher, and we start seeing this thing grind and grind and grind, right? Okay, that's a giveaway. We're probably now looking for a breakout pullback. I'm going to mark off that high. I'm going to mark off that big low. I'm going to think about where that range level is, right? Kind of the same idea we had today. And then try to get that nice deep pullback, right? Get underneath some prior swings. Oftentimes, these will come in. The bears will try to get short off the moving average. We can use what I call a seller failure pattern, right, into that run back up to retest the high. So just be aware of that, right? If we roll up like this, okay, 1, 2, bull trap back down again. But again, we're bullish overall, right? We're bullish overall. So we have to be prepared for if we were to roll off that low and run higher. If we start seeing this thing grind and grind and grind, this is a pretty easy one. Anytime we see these, we call these pop and grind moves, I simply draw that trend line off the highs like this. I mark it off that low, and I want the first test off the low of that channel. All right, it could be a trap, like I talked about a lot in this video, right below a prior swing. It could be underneath the 21 moving average. Get bears coming in, trying to sell short, right? It's a very strong pop and grind. The buyers want to go back and retest the high, and then use their stops to fuel that failure into pullback combination. You'll learn a lot more about failure pullback combos in that free video course I mentioned earlier. That's one very kind of variation of this that I'm watching here for tomorrow. All right, guys? So that's pretty much the overarching game plan here on the E-mini S&P. It's very similar, like I said earlier, on the NASDAQ. I feel bad. Leave the NASDAQ here, lonely here right now. The NASDAQ, same thing. It's a very strong run up. We expect two-legged pullback and a retest of that high. It's a range with a breakout pullback we're in right now, and that double bottom is a very important clue. We look now over on the tick chart. This, of course, is a 4,000 tick chart on the NASDAQ. The NASDAQ simply doesn't have as much volume as the E-mini does. We still have, same thing, right? Same thing. This is that big range we talked about last night. This is that big breakout pullback. So we know exactly where the market wants to go right now. That is kind of the overarching clue on the NASDAQ chart. Same thing on the E-mini. And then, of course, you'll notice right away there's that trading range, right? And again, a range market, a range loves to rotate back and forth. So we expect, again, we're more bullish than bearish right now. So we filter our trades looking for buys underneath that range. I will keep an eye out for a short above the range, but the NASDAQ definitely has more potential, for example, right, to roll up and get that bear trap on the way higher, right? I mentioned earlier, like this pattern right here. Look for these patterns right there, right? So as it goes higher, strong move, shallow pullback, higher high in price, again, higher high in price, and that trap below that low. So, again, as we go lower, these patterns, these bear traps, these come in lots of shapes and sizes. I have a lot of examples of these in the free video course. But again, right, we go lower, we come up, bears once, higher high, bears twice, that bear trap, right, back into that range. Again, sometimes these will V-bottom. Sometimes they'll kind of pop back up and begin to grind going higher. I simply draw that trend line, mark off that low, right? Mark those swings. I think traps on the way back into the ranges are the most important clue, the most important game plan for tomorrow. But if this may be a bear trap like this, it may be a seller failure pattern below that moving average, right? But that's the general idea here. As we go higher, if we were to just simply rip and run higher, right? We know where the market wants to go. I don't want to buy high up here. I want to buy nice and low, and that's kind of reason number 12 why I love trap patterns, because trap patterns, as you guys learn in the free video course, if we start ripping and run higher, we know where it wants to go. I just simply don't want to buy high right now, and the way you buy as low as you can is you buy low with a bear trap, right, above, or should I say below that low, higher high in price, right, and that trap below that low, right? As we get up around these highs now, we're very bullish overall, so make sure you stay patient for those buyers trying once, buyers trying twice. Let those buyers commit up there. That way you have their stops, right? Now your stops are the fuel you need to use. This is why I love traps so much, because you literally trap one side of the market. In this case, you trap the buyers in long, right, off of that high. Horrible place to be a buyer. But once those buyers try once, try twice, now we can go out and again, short that sucker. Make sure you get that bull trap right on the entry, right? Short that sucker back down into that trading range. If it was to go up and V-top, you get the point, right? Keep looking left, keep finding those channels, right? Keep finding those prior swings and keep trying to get short right off the top of that channel. Same thing in NASDAQ too. If we run higher here and we start to grind, right, and really show some good evidence going through that high, the S&P is a lot easier to justify this. The NASDAQ will need to show us a pretty clear kind of pop and grind going higher. It seems a bit unrealistic right now, but we'll see how the market opens up and how they like those earnings out of NVIDIA. But if we pop up here and begin to grind, those pop and grinds are tough to fight against. Mark off that high, mark off that low. Think about using prior levels of resistance as areas of support. And I want to get that pullback, right? Get underneath that moving average, trap those bears in below the 21 EMA, and light those stops up, right, for that failure into pullback combo, trying to go back up to retest those highs. And once we get back to retest the highs, who knows? We might get one of those 1, 2 bull traps back down. That would be your double top reversal, just like a double bottom reversal is on our radar here right now. So again, rotation back and forth, and traps. Those are what I think the key to making money. Definitely tomorrow, possibly though, if we stay inside the range tomorrow, possibly on Friday as well. Keep trading that rotation. Keep an eye out for that pop and grind breakout, and you'll be moving in the right direction to make some money before we take off for Thanksgiving dinner on Thursday. All right, guys, that's the game plan for tomorrow. If you like this stuff, make sure you subscribe, hit the like button. Any feedback, different ideas you might share, I would love to hear from you down in the comment section below. And remember, we like to plan our trades the night before on these videos, but tomorrow we'll get together and we'll trade our plan together tomorrow morning in our trade room. We get together every morning, 8 o'clock Eastern time, with all the advanced members, and we trade these markets together. I can't think of any better way to learn to trade than to come out, ask a bunch of questions, look over my shoulder, and trade right along with me. I'll put all the important links we talked about tonight. I'll put the free class links, the trade room membership links, my Twitter feed down the description of the YouTube video. If you're watching for the first time right now, I would definitely recommend start first with that free video course. Learn the strategy, see the examples, get the wind at your back, get momentum moving in the right direction, and hopefully I'll see you sometime soon, trade along with me sometime soon in the morning trade room. All right, guys, hope you learned a bunch here tonight. Hope you use this knowledge to make a bunch tomorrow. Hope you have a fantastic Thanksgiving holiday. Off tomorrow night. We'll come back on Monday. Be there or be square. My name is Joseph. Thanks for being here, guys. Adios, amigos. Bye-bye for now.